Saraya Darby, and our CFO, Alexia, is here as well with us. We're an early stage venture fund. We're based here in New York City. We invest in companies at the early stages, pre-seed through A. We're very hands-on investors. We definitely go into more detail about our ethos there. We are purpose-driven investors, so we back businesses that are building beyond the bottom line. We really think about that as people, purpose, and profit, but essentially businesses that are doing well while doing good. We break that down across 5 categories, one of which is the care economy, which I mentioned earlier, intentionally broad view of healthcare that is inclusive of, how we would traditionally think about healthcare, but also personal care, elder care, child care, mental health, pet care. We even think about home management, family management as part of that. We invest in the future of work, certainly a hot topic right now that people get into as well. But everything surrounding the world of work, and particularly how people are impacted and supported in the workplace. We invest in financial inclusion. This is a lens on fintech, specifically geared towards equity and access to capital. Sustainability as well. So for the last conversation we were having, obviously one of the most important topics as we think about purpose and impact. And then our last category is supply chain mobility and logistics. Our partner Marina comes from a background in the shipping industry, so we really started with a thesis around food tech and then have expanded that into broader supply chain. So that's kind of the fast version. I come from an operating background myself, spent a couple of years at Bain & Company, mostly in consumer and retail, private equity group, which is really where I kind of put my investor, and then operating at growth stage and early stage startups, Harry's for a couple of years, and then shaving company for anybody who's familiar with it.
Sure.
I'm sure there's a couple in there. I built their women's brand, Flamingo.
I represent the group.
I can't support you on that.
Exactly.
And then a couple of years at a seed stage company in the Candy portfolio, actually, as well. So,
Great. Aubrey, you want to give a quick hello and who you are?
Sure. Thanks everyone for tolerating me virtually. I wish I could be there, but a ski accident has kept me fairly not mobile. So my name is Aubrey Hruby, and I am a co-founder of Tofino Capital. We are a small seed stage Africa-focused venture capital group, though we are open to investing in other frontier geographies such as Pakistan, Bangladesh, Philippines, etc. But most of the investments we make are in African markets. On that, I've spent the last 20 years in the investment advisory business around African markets. I also co-founded 5 years ago a PR firm that works for African startups. So we really do have both a hat in the important storytelling and communications part of venture, but then also back the founders that are interesting and exciting. And I just think that when I wrote a book on the African tech sector that came out in 2015, and then there was a total of $350 million going into an entire continent of 1.2 billion people in venture. And last year we crested 4 billion. So you can see a pretty dramatic uptick. So a lot of interest, a lot of excitement, very fast growth. Happy to talk more as we get into it.
Here.
All right. Thank you. For those that were not involved, I guess, at the intro today, I'm Peter Thurlow. I'm a partner shareholder at Polsinelli. It's kind of odd for me to be on this panel, VC, because I'm actually not a VC, but I work a lot, especially the last 5 years with family offices on money, what I see in the business, work across all different technologies. As Marty mentioned before, I actually started as a mechanical engineer, operated power plants, and as you look out over New York City, this great view, even though it's somewhat cloudy today, getting the lights on at night with thousands and thousands of miles of electrical underground transmission and distribution cable technology is just fascinating to me, especially if you've ever been underground to see what's under there. It's quite the challenge. But with Con Ed, went to law school at night, worked on patent portfolios for large companies. Was at a big law firm, Jones Day Law Firm, where I had some big clients like Cardinal Health that would love to buy Chet's cardio monitoring technology and others. So we worked on million, 100 million, several billion-dollar deals in stent technology and cardio area that was absolutely fascinating and global. When I turned 50, which was 6 years ago, I joined Polsinelli. 950 attorneys, now 21 offices, growing nicely, and I still handle, my expertise is on the IP and the patent side, but I work and I meet people like Marty and then John, who's sitting to the right of me. We probably met 4 or 5 years ago at different investor events, because all the startups need funding, whether it's a few $100,000 to a few million or 50 million or 100 million. So I get involved, focus on the IP because that's what evaluation is. Then we also bring in, we're a general practice law firm, so I'll bring in my corporate team, my venture capital team, and others to handle whatever the company needs. So I'm probably outside counsel, outside general counsel to 30 or so, if not more, depending on the stage of the startup companies. And it's really terrific and great fun. So I'll get in more based on different areas I'm working in as we go into it.
And I'll just give a quick introduction of myself. I'm Howard Cohen. I'm an advisor with Strategies for Wealth, and I focus on working with business owners, entrepreneurs on their business continuity plan, their exit strategy, and help entrepreneurs when they're preparing for that financial bonus that they have and the financial event, so that when they do make a sale, when they have investors come to them, that most of the money doesn't go to the government, but they can keep it in their pocket and do it in a tax efficient way, and also help them blend together their personal financial planning and their business financial planning, because often business owners and entrepreneurs are so busy that they don't have time to take care of the things that need to be taken care of. They know exactly how much money is going on in their business, but they don't know what they have in their personal life. And that's important. So I think this is a very interesting group of people. And there's quite an age span of different people in the group, which is great. So one of the thing that I wanted to ask Aubrey first, because it was fascinating when we had our first conversation, is why Africa?
Yeah, I mean, obviously it has to do with my personal background of where I've spent my entire career. But in a nutshell, we believe that it's just underserved relative to the opportunity by venture capital. So if you look at venture capital per capita, markets like Egypt, like Ethiopia, and Egypt has 100 million people. Nigeria has 200 million people. They fall in, Egypt's around $2 per person in VC, right? Just as a reference point, the US is at 880 per person. And if you compare, okay, so let's not compare it to the US. Let's compare it to India. India is over 20. So again, it's 10 times more penetrated than African markets, the big ones, particularly Nigeria and Egypt. On average, the continent as a whole, which again has over 1.37 billion people, is at about 2.5. And the companies we're seeing are top notch, founded by incredible founders who, these are Delaware registered companies. They're no fools for how they see raising money for global emerging market billion-dollar companies or more. So that's really why we had a unique position and a unique opportunity. And we think African markets are essentially maybe 7 years behind India, for example, if we want to compare to another emerging market. So I'm happy to answer more questions. It's obviously not one place, it's 54 countries, but we tend to focus on the larger markets, say Nigeria and Egypt, Kenya, and some South Africa in terms of the startups that we back.
I just have a follow-up question to that, which is the influence of China and Russia in Africa, and how you see that affecting the growth and the political influence that they have.
Yeah, like all investing, it's often easy to confuse headline risk with counterparty risk or overinflate one or the other. Your real issue and risk that you faced in investing in African markets is execution risk. Operators, are you backing the right founders? Now, China has been an incredible financier of African infrastructure. And frankly, that has helped the ecosystem take off. So for example, in terms of cell phones, there's a company that doesn't even sell phones in the United States called Techno. It's owned by a Chinese company called Transsion, and they have about 52% of the cell phone smartphone market. And they made smartphones under $100 that are very, very good. And it's this reality that allows fintech and a lot of the opportunities to come up. But, you know, again, the companies that we're backing are often started by Nigerian Americans or, you know, dual citizen founders who are global quality founders. And 62% of all venture today going into African markets, and like I said, was over 4 billion last year, is tied to the US in some way. So the Chinese haven't been involved in the venture space, really. They've been more about building roads. And frankly, those roads benefit everyone. We're not very good. US is not very good at infrastructure. Look at infrastructure in our own country. We haven't built it for 40 years. So, you know, being competitive on infrastructure abroad is not something that the US is very good at. So we are good at technology. We are good at entertainment. We are good at venture. And that's where you see the strength today of American entities operating. Russia has been only involved in 2 areas. One is in gas in North Africa. So Gazprom is involved in some of the oil and gas projects, and then sending mercenaries to markets that no one wants to be involved in, like Central African Republic. I don't see startups in the Central African Republic.
Sure, Aubrey, I have a question.
Go ahead.
Question? Sure. In the beginning, you talked about 54 countries, and you rattled off the sizes of various economies, various countries in terms of population base. I'd be curious, based on the size of the economies. That's another big issue, because it seems to me that, you know, you can go from a couple hundred million to 4 billion, and that's good. But I guess you want to focus on what's the maturity of those economies, how can they accept venture capital, and what are some of the low-hanging fruit industries like infrastructure and other ones that need to put capital to work. Can you comment about that?
Yeah, so the industries where the money is going are fintech. They're asset light, you know, sectors, and neobanking, fintech, payments. These are the main areas. But I tend to back B2B plays, SaaS software. So think everyone knows Workday, right? I've invested in the African version of Workday, which we believe is a company called Seamless HR. There are, you know, you can think of the analogies. I mean, there's a Brex for Africa that is out there, a Plaid for Africa. There are these type of plays. So they're mainly fintech. You know, the Nigerian economy is somewhere around $420 billion is the full economy. And so, you know, these aren't large economies from a GDP perspective, but again, from an underpenetrated venture perspective, they are. Yeah, I'm happy to give some more examples of companies. Auto tech, I like auto tech plays. There's no such thing in Nigeria as a AAA. If you break down on the side of the road, there's no one, you will have to find some mechanic on the side of the road to help you. And then he might find a carburetor and you don't know if it's new, used, if it's where it came from, etc. So there are companies that are trying to step in and build trust, transparency, and deal with the information asymmetries in this space and become like a marketplace, a trusted marketplace for auto parts, for example. Those type of companies are interesting. There are companies that are digitizing informal trade. So tons of opportunities, but you know, the majority lion's share is going to fintech right now.
One more question?
Yeah. Are there countries, Aubrey, are there countries in Africa you would not invest in? And one other question is, are there 3 countries in Africa that maybe make up more than 50%, or, you know,
Easily,
you mentioned.
yes. So for example, Nigeria and South Africa are the largest economies. And together, you know, they're going to be not over 50% of the whole continent's GDP, but near close. So
I
you have
mean for your fund.
For my fund, Egypt and Nigeria. And the reason for that is they're large markets. They both have strong entrepreneurial cultures. So think of large markets, and you know, everyone thinks of Nigeria and the 419 scammers. Those are just people who are like trying to make it rich quick, and they have this entrepreneurial drive. right? And so there's an entrepreneurialism that's very strong in Nigeria. There's such thing as the Nigerian dream. A kid is born in a village in Northeast Nigeria and thinks they can make it, and doesn't see, and it's very similar to the American dream. And Egypt has Cairo, and Nigeria has Lagos. They're both cities of over 20 million people, where like, if you're not really out there ready to hustle and make your way, you won't make it. So for me, I like the larger markets on the continent, because the companies that come out of there, their own home market that they know well is enough to get them a very big valuation. They don't have to have guaranteed success in other markets. Whereas like, let's say if a company is coming out of Togo or Liberia has a population of 4.5 million. There's no way they're going to scale at the level that I need them to scale with just staying in Liberia. No, they have to succeed in a country like Nigeria. And I would rather always back a Nigerian entrepreneur who understands the operating environment than a Liberian entrepreneur coming that has to eventually succeed in Nigeria. So generally, we're pretty heavy the larger markets.
I'm going to step in here and say, let's continue with the questions that we had circulated. Because I actually have some questions for Aubrey as well in terms of regulatory. But why don't we get back to the US?
Yeah, so Emma, I wanted to ask you something that you said to me, is that the operating experience of the members of your firm, the partners, from top to bottom, is really key to success that you're seeing in your investments.
Yeah, absolutely. I mean, for our firm, everybody on the team has operating experience. And as I mentioned, we're working with early stage companies. So as early as their first check-in at the pre-seed, and then again, investing all the way up through the A. And so we really bring kind of a diversity of operating experience to the table that I think makes a meaningful difference to our companies. My partner, Soraya, built social media for the New York Times, and then is a multi-time co-founder herself. She built a company that she sold to OpenTable. She was early on in a company that sold to Facebook. And during that time became a very active angel investor from the network that she was able to build in those roles. And so she really brings that like grow it from the ground up fundraising and also acquisition experience. Marina has such a different complementary experience. She comes from the later stage world. She was at her family's shipping company, everywhere from working on the ships to executive leadership, and ultimately took that company public and led the in-house roadshow for the IPO. And so that's obviously another meaningful piece of experience that comes in as our companies start to mature, which our Fund One companies very much so are at this point. And then also built her own family office. And so I think she really understands that side of the world. And as the two of them came together to build this fund, that set of complementary experiences was important and remains important. I give a little background on myself, but everything from sort of working with executives at the company to being at a growth stage company. I saw Harry's go from 150 employees in New York to 400 employees in New York, built their first brand outside of the Harry's brand. That's one experience. And then at a seed stage company, building every function from the ground up, HR, marketing, finance, investor relations, fundraising, filling in as a software product manager, which anybody who's got early stage experience understands the daunting task that taking on a new role like that is. But I think for us, it's really important, and Alexia as well comes from the world of institutional finance and private equity. And so I think for us, having those sort of experiences is critical, because when we write a check to our portfolio companies, I mean, we think to some extent that capital is a commodity, and really our portfolio companies are signing on with us as partners. We have to deliver on the promise that we make to them that we're going to support them and we're going to add value. And so for us, it's very important that we have that diversity of experiences, so that when they call with any question, really either somebody on our team has firsthand experience and understands how to help them navigate it, or we have somebody in our networks that we've built over the years that can help them navigate those questions as well. So yeah, that's kind of our ethos around it.
How big is the fund and what vintage are you?
We are currently investing out of Fund Two. It's a $65 million vehicle, and we're at $100 million in AUM.
And you guys have like a venture partner group, I guess, or something like that?
We have a handful of venture partners, yeah, but we keep the team pretty tight. The investing team is Soraya, Marina, and myself, and then we're bringing on a fourth investor, Lucas, who comes from the impact investing and small business lending space. And then Alexia is obviously very actively involved with us as well.
Are you raising a Fund 3 right now?
we are starting to get ready for this.
Okay,
Yeah.
okay.
But, you rattled off a number of experiences the partners have had collectively. What areas of focus is in either the first fund or the second fund in terms of the mix of industry, consumer, health
Mhm.
tech, fintech, et cetera, shipping?
Yeah.
Et cetera.
No, it's a great question. Oh, sorry, what was that? We try to invest pretty equally across our sectors. I mean, we very much so choose sectors that we feel like are big enough opportunities. So we're seeing a lot of really interesting deal flow. Obviously, that's going to ebb and flow a little bit, but I would say generally speaking, we're looking to have pretty much equal spread across, I would say, healthcare, future of work, fintech, and supply chain. And then sustainability is one where, because there's so much overlap with other sectors, particularly with supply chain, we don't necessarily see 20% allocation there, but I would say across the fund, it's well represented.
In the $55 million fund, how many names?
So we've invested, it'll depend a little bit on kind of where we shake out over the next couple of months, but we're thinking we'll make about 30 first investments, and then we reserve a significant portion of the fund for follow-on investing as well.
So not a micro VC, but probably not a Series A as well.
We're able to lead, and this is where, we had conversations earlier today about price sensitivity. We are leading pre-seed and seed rounds, and we're really looking for opportunities where we feel like they're priced at a range that's reasonable. So for about $1 million to $2 million check, we're able to typically command somewhere between 8 to 12%. And then for a Series A opportunity, it's a smaller portion of the fund. We wanted to have those opportunities available to us, but we're not going to be able to lead or co-lead around for the rounds of Series A rounds that we're seeing these days.
Sure.
And what's the value that you feel like you add to the company that you're investing in?
Yeah, it's a great question. I would say there are areas that we specialize in as a fund, and those are first and foremost go-to-market. We actually have a go-to-market team of contractors that work very closely with us across design, content, PR, and recruiting. And so we can really plug in also from our own respective experiences on everything from, building out the go-to-market plan, introducing to key business partners, and then every aspect of growth marketing, brand marketing, partnerships, influencers, you name it. That's where we plug in very heavily. We also plug in very heavily on follow-on financing. I mean, essentially at the moment that we close a round, we're helping our companies think through what the plan is going to be for the next round of financing and are actively building out that plan, materials, and making those introductions. And then I would also say, just as a lead or a co-lead investor, we really think it's our responsibility to just be the people that our teams can call at any hour of the day with any kind of question. And so we're really there to sort of support and field those questions, whether that's people issues, cap table management, anything that might come their way. It's either us that's going to be helping them through it, or again, we can connect them to the right people.
What vehicle are you using to invest in the companies? Like, you do convertible notes or you do straight equity?
We do both. I think for a seed round, we're typically going to be pricing the round. For Series A, it'll be typically a price round. We're seeing more and more
For
states.
seed, you pricing it or you taking? No.
Typically we'll be pricing the round. We'll do a price round. We do safes and convertible notes sometimes at the seed. At the pre-seed, a safe is very common, just because they don't want to spend on legal fees if they don't have to. And then for a Series A, we're typically going to be investing in price rounds, but we're typically not pricing them.
Peter, what do you think about them not wanting to pay legal fees?
They wouldn't be the first. They wouldn't be the last, I guess.
So that's a lead into really, where do you see yourself positioned in these types of transactions?
So it's very interesting, because when we spoke yesterday, both with Aubrey and Emma, of course, I was excited to hear about them investing in the seed stage, because quite often we say when we're raising capital, sometimes it's more difficult to get the first $100,000, $500,000, $1 million to get the company to a point where it can really grow and take care of the software issues and many other things. But I think, who was it? Mark said earlier, I kind of connect people. So somehow I get involved in all these interesting things, including the discussions today. So people are raising funds. They'll say, Pete, we're raising a fund. That's Greg Norman, former golfer, is raising $100 million fund, another person is raising a $75 million fund. Can you share it with your family offices? And they're investing in a new term that in the healthcare space, I wasn't familiar with maybe 6 months or a year ago. It's called longevity. As the aging population, all the stuff that goes on, whether it's Alzheimer's or related illnesses as we age, there's a lot of investment going into that. So not only will, once they get some of that fund or the money in the fund, then they'll say, what companies are you looking at? So then we'll try to connect. And during the process, of course, from a legal fee standpoint, there's going to be certain work done, whether it's, I seem to spend more time these days on cap tables, convertible notes, equity, safe agreements. Obviously, I can take care of the IP and the patent stuff, but you're always learning about the operating agreements, the board agreements, the advisor agreements, bringing in teams of people. So I work with accountants to make sure that the finances taken care of with the startups. And I'll work with marketing groups, anybody in the consumer product area. You can have the greatest product in the market, but if you don't have good marketing, then you're really in a tough situation. Other areas I just kind of threw out that I mentioned, I think Suzanne earlier today talked about ESG. There's a lot, even some projects going on in Africa, decarbonization, the climate change, all technologies. Unfortunately, we're just not going to be able to cut down on the emissions as much. So if we can get those emissions out of them, have carbon capturing, many people probably familiar with that. The energy background, those are particular interest to me. There is a lot going on. I wanted to talk to the gentleman that mentioned the nuclear side. Was the new nuclear technology. I used to work at a plant up here called Indian Point Power Plant that and other plants, they have new interesting technology where you don't have the waste involved that you did in earlier style plants. So if anybody's interested in this particular area, there's a great show on Netflix called Inside Bill's Brain, Inside Bill Gates's Brain. One of the 3 episodes talks about new nuclear technology that's very exciting and promising. So I'll try to match people in that area. But at the end of the day, I chair the med device group. So we're always looking at the spine technologies, neuroscience, orthopedics. I probably have 6, 7 orthopedic surgeons as clients that commercialize that technology and doing quite well. And we'll bring that technology to J&J, Medtronic, others, Cardinal, of course, to get them to buy the companies. And then, in New York City alone, a few blocks away is Mount Sinai. In this building is Memorial Sloan Kettering. A few blocks this way is NYU. A few blocks up this way is Hospital of Special Surgery, Weill Cornell. These are all technologies that, unfortunately, especially with the universities and medical systems, they don't have contact enough with people like all of you, with Marty, John, and others. So a lot of the technologies, unfortunately, still on the shelf. I try to become the middleman to help that not happen. Then there's other things. Telemedicine is very exciting technology. A lot of wearable technology, whether it's your Fitbit or Whoop technology, others that we're all going to be walking data machines of our own data, and years to come. That data is especially valuable as we go forward. So there's a lot more just data plays just based on this. How we depersonalize that data and how we monetize it is a continuing challenge. So I'm not the atypical patent attorney. I can get you a patent, but I like dealing with this stuff a lot more.
One of the things that's happened, Peter, is a number of the universities have developed entrepreneurship business plan competitions, which is part of NYU. So the technology transfer piece, whether it's Columbia, NYU, or multiple universities around the country, are starting to attack the problem you just enunciated.
Yeah, so NYU is more than, they make $2 billion a year just licensing their IP. Columbia, Orrin Hershkowitz, they do a fabulous job, spin out many companies.
And the Midwest too, and the West Coast, they're starting to get that.
Yeah.
Program.
Midwest, you probably know about the capital concerns issues in the Midwest and throughout the country, other than New York and Silicon Valley. It's getting better, still not perfect. Places like, Stanford and Silicon Valley areas, it's off the charts, but if you can't get access to the capital, you can't do the FDA studies. If you don't get the data, then no one's going to invest. That's money. That's big money to do that. But it's fascinating. Some universities do it really well, others don't.
Something that all 3 of you brought up is marketing and public relations. And I wanted to just touch on that for a second. Maybe Emily, if you start with it, and Aubrey, you said you started a PR firm.
Yeah. I mean, I definitely am eager to hear Aubrey's thoughts on this, but I think, more and more we're seeing VC and marketing and PR becoming one and the same, right? Even when you think about the opportunity to announce a new financing as an opportunity for a company to announce its place in the world, that's just a starting point. But I think where a lot of companies are coming to VCs for support, and particularly those who are more on the product side, more on the technical side, marketing is an essential part of go-to-market. PR is an essential part of go-to-market and growth. And being able to tell your story and articulate it and get that story in front of the right people, whether that's through the press, whether that's through very targeted business development outreach, whether that's through direct response marketing and customer acquisition, whatever it is, even honestly building a sales engine and a sales team, it all comes down to those same kind of core functions of marketing, storytelling, and doing that through all of the different channels that you have available to you. And so I would say most, if not all, of our portfolio companies come to us looking for support there. Even those that have experience, I think it's a place where we're seeing VC being more and more hands-on with that being certainly something we plug in. But yeah.
Aubrey?
Yeah, I'm happy to chime in. So I founded a PR firm because I had an epiphany that people can't invest in things they can't see, period. And all too often, entrepreneurs outside of the Valley or outside of a traditional pattern, whether they be people of color or women, et cetera, are invisible to global capital. So we started a PR firm. It's called Insider PR. We had a simple way of naming it. We literally said, okay, these people feel like they're on the outside of global capital, sir. We want to put them on the inside. So the PR firm also gives me a good footprint on the ground because I have 12 people based across the continent through the PR firm. And we're different than an Edelman or any of these other things. We started as providing PR to startups. So taking, an Edelman goes and works for Nestle in Egypt, trying to get them Egyptian press. We work for an Egyptian company like Swivel or Maxab or these type of players, getting them global press so that they can get the global visibility. For us, it's an asset because A, we see a lot of the market. It gives us incredible deal flow. We don't invest in every company we see, but it gives us a different view of the companies. We've worked for over 100 leading African startups. And my co-founder and I started angel investing because of that. We saw all these great plays. And then additionally, it gives us a value add beyond money. Most of the entrepreneurs you'll talk to want someone who could be strategic. And the fact that we own a PR firm and know how to do the storytelling is very helpful and strategic. That and my co-founder and I have a background in advising big companies investing across the continent, also large African entities. So for companies, particularly in B2B space, we have a lot of value add in terms of strategic introductions and partnerships. So they see us as being very strategic. Plus, most African companies want to go to another country. So market entry. I think Marty might have asked a question about regulatory and helping navigate regulatory concerns or questions in other markets. So we have those hats we can wear as well. But no, I mean, look at Andreessen today and what like A16Z has become. They're more. Someone argued that they're doing a content creation space plus VC, right? So they got their podcast. They have tons of media and content creation. Thought leadership is very important in this space. So I really see more and more and more overlap.
Yes.
Yeah, this question ties into the PR comment, and it doesn't address Emma's question, but addresses something Marty talked about. One of the things you have a problem in Africa, I guess, is politics, regulatory issues, legal constraints. Let's put a graft and fraud. That seems to be a hell of a lot more of an issue in certain countries. Again, I might be probably be pejorative, but that's an issue you must grapple with a lot more, Aubrey, than what Emma's doing in the States. How do you address that?
Well, not really. Again, I always ask someone like you, how many mayors in America are in jail for fraud and graft and corruption?
I don't have that list handy.
And so, believe you me, just take a look at Illinois alone. So corruption is alive and well in America at a municipal level. And no, most of the entrepreneurs I deal with aren't dealing with government. Literally every day that goes by, they don't deal with a member of their own government is a good day for them. Just like I live in DC. You think Valley guys like to spend a bunch of time in DC? Oh, hell no. Every day they don't deal with government is a good day for them. And that's the same for the African startups that I'm dealing with. You know, they're in spaces that, you know, government is not acting in and in regulatory areas. Now, the crypto guys, yes, they're dealing with the central bank and how how crypto is being regulated, but that is true globally. And on fintech, yes, they have to deal with what is a bank and a bank license, but that's true globally. And so, you know, again, I haven't seen in the entrepreneurs I deal with, most of them are, again, Nigerian Americans, Nigerian Brits. They operate with the same integrity and understanding as anyone around the table today. So I haven't had to deal with any of that. Just the perception of others thinking about it that I have to deal with.
So just to return to the PR side, I don't know if anybody else, but I'm a pretty big basketball fan. So there's Bill Walton. Bill Walton's a famous basketball player, obviously UCLA. He's a celebrity spokesman for one of our kinetic energy drinks, ketone-based energy drink, plant-based, no caffeine or anything like that. So what's fascinating to me is just if you get on Oprah's list, if you get on any big lists, that just propels the companies in ways that you just can't do on a regular basis. And we were talking before about the Kardashians. I'm not a big fan. My daughters love them too much. But from a business standpoint, I do respect what they've done, and they have 100 million followers and all that stuff. And you get a product in front of them, it goes viral, if that's the right word. So in the last 6 months to a year, I've actually been meeting with more kind of investor relations PR people that say, Pete, Kevin Durant, LeBron, you know, others will do this for a certain amount of equity, and you know, they'll do pitches for you here and there, and that's what we're trying to match. So we started with Bill, and we're going to be doing others, just to kind of get on that marketing, because it's not, I'm not really proud of it in our society, but it's just, that's the way you have to get it out there. You can have the best product in the world. There's a woman, the ladies in the room may know this. I serve as a mentor to the Harvard Business School. So there's a stainless steel container. The company is called Swell. For those of you that do yoga and things like that, it's a very popular device. I met Sarah when she first started the company, and I said, you know, Sarah, it's a stainless steel container. Oh, you know, good luck. How great is this going to be? What happened? She got on Oprah's best gift list, and 50 million, you know, container sales a year. She's been killing it. She owns 100% of the company. You need to raise money. So it's a fascinating area with the marketing.
The same thing is happening in my space. There's a growing overlap, and I'm also very engaged in basketball stuff. A dear friend of mine runs the Basketball Africa League, which is NBA's investment in the region. And you'll see now, like, for example, I was 3 weeks ago in Senegal for the second launch of the season there. And Dikembe Mutombo is now a partner at or a supporter of a particular Africa venture fund. And yeah, it's been Dikembe's great.
Exactly. That's his name when he blocks somebody's shot.
Yeah, there's more. There's more of that happening. I'm seeing more and more. I mean, Joe Montana's VC fund invested in a Nigerian startup. Well, it's actually Nigerian Ugandan. And then Marina has made her first Africa investment. And so us, like, our entire asset class or ecosystem is being strengthened by the linkages, particularly among Black Americans and African entrepreneurs and the celebrity scene. So, and you're seeing that will happen more with Web3 and all the Web3 kind of creators that's happening, and the crypto creators and NFTs. And so we're going to come full circle with the entertainment space and the venture space, and it's certainly also happening in Africa.
Yeah.
Rebecca, did you have a question?
No, she answered it in the.
Okay, good.
One more quick comment for those. Kobe Bryant put around, the late Kobe Bryant put about $7 million into this energy drink called Body Armor. Years later, it was bought by Coca-Cola. He made $500 or $600 million from that. So, you know, it's an area that the athletes are making so much money, they're becoming their own family offices in many ways.
Do you see a rule of thumb on the spread of the endorsement, like anywhere between 1 and 5, 3 and 8? Like what does that look like
Yeah, I don't see
from
that.
your standpoint? Like,
Yeah, I haven't
results?
seen that yet, yeah.
We've seen, I mean, we see a huge range. It can be anything from a celebrity being named a co-founder and getting, you know, that I've heard of situations where a celebrity gets 10% of the company with zero investment to be a co-founder, and they're making a commitment on a minimum number of social posts and endorsements and things like that, to, you know, coming in and being an investor on the cap table and negotiating what the deal will look like. And it's something, I mean, we've put a number of our portfolio companies in touch with great talent managers to find their exact right fit.
But
Because I will say it's an investment that can go, it can be gangbusters, but it's also an investment that if it's not the right fit and you're not setting up the agreements the right way from the start, it can also be a huge waste of
Right.
money for.
There's risk.
But it's something really tangible because celebrities like LeBron James charges $500,000 per tweet, right?
Yeah.
And I think Serena charges about 250,000, right? So you get, because they have so much viewership
Yeah.
and following, right? So
Yeah, Tom Brady
Yeah.
is what he's doing, even off the football field is amazing, you know. Just-
right, you got the whole
And he's
crypto
got
thing
a whole-
going on,
he has
right?
a
Yeah,
whole
right.
brand,
Yeah.
multiple, I think, but
Yeah.
yeah. So it's interesting, but it has to be set up with, I mean, I've seen
Right.
celebrity endorsements that are massively expensive and go nowhere, and I've seen
Exactly.
some that are super values aligned and, you know, completely change the trajectory of the business, so.
But I would say playing for Golden State made Kevin Durant another $500 million
Yeah,
just
yeah.
from the investments from the VCs,
Yeah,
right? So
Well, we can't forget that the original athlete investor was Ty Cobb and Coca-Cola.
there you go.
I didn't know.
Can you guys, Emma, can you talk about geography? Because I know we're talking a lot about Africa, but you talk about where you guys invest.
Yeah.
I know, like, you know, because you're doing seed, pre-seed, Series A. Are you looking specifically at New York City or other areas and, you know, sectors as well?
Yeah, so we invest all over, I would say predominantly in the US, but about 20% of our fund is reserved for international investments. That is mostly concentrated within our shipping and supply chain portfolio, where so much of the innovation is happening around the world. We have investments in India, Singapore. We have an investment in Australia as well. That's in the sustainability space, actually. So mostly in the US, I think actually a really nice thing that has come about from COVID is it's just made it so much easier for us to invest in other spaces outside of New York City. I mean, we still very much so believe in FaceTime and the power of FaceTime. And so we're actually in the middle of organizing a series of dinners around the world to meet with the pocket communities everywhere from Chicago to San Francisco to Greece. But it has opened up a lot of opportunity for us to have conversations and get to know people around the country in a nice way. So it's allowed us to really diversify, which has been great.
So, Aubrey, I wanted to add on to add to that or ask about that. Like, your main focus is Africa. You mentioned Pakistan. What other parts of the world do you see as emerging as places where you see investments?
So again, we like large markets that are fairly underpenetrated by venture today. And so other options that we see some interesting plays are in Philippines, and one or two in Bangladesh. I just had a couple sent over from Sri Lanka. Again, though, the majority of our effort will be in African markets, as that we know it. We did, from the PR side of the shop, open operations last year in Latin America. So I have a Colombia office on the PR side. And so because of that, we are seeing some Latin America deal flow as well. But again, we're a micro VC. The whole fund is $10 million. So we gotta be, you know, we're small. And we continue to focus on what we know best. But I can really say that the Pakistan opportunities are quite overwhelming. There's so much. I get the most deal flow as of late out of Pakistan.
Just on that note, we do a lot of work with Israel. I mean, just amazing country with just great technology. It used to be only software, now definitely on the med device side and biotech side. Teva Pharmaceuticals is one of the biggest companies there. We actually did a fair amount of work with software companies in Ukraine. Unfortunately, everything going on there. There's a lot of software development in Costa Rica, which is they're very good. Norway, many of you may know, that has a $1.2 $2 trillion sovereign wealth fund. So there's some amazing stuff and lots of oil reserves there that's going on. And it's and then just separate issue. One of the exciting things for me, because I have my 2 daughters and my wife, and I do have 2 boys that I like too. But there's a lot of more females in founders of companies, which is very exciting. Femtech is a very big area. We see a lot more females also as VCs. Now, it's sad that I have to point that out, but just a few short years ago, 3 or 5 years ago, we just would never see that. So to be on the panel, obviously with Emma and Aubrey, I have to say, in the last 2 or 3 months, we've been having meetings. Half of them have been at least female founders or VCs. So that's really great personally to see.
I think Rebecca had a
Yeah,
question.
we're also almost entirely women led team at the Yale Street art club.
Fascinating.
Well, for any of the female fund managers, my partners actually manage an organization called Transact Global, which is I think it's the world's largest community of emerging female fund managers. And it's just an absolutely incredible community of people that are trading notes and introductions. And I think they're at over 300 members globally today. So definitely.
Well, on that same note, I've been very involved for the last probably almost 8 years or so of something called PE-WIN, Private Equity Women's Investment Network. And there were near 1,000 members of women LPs and GPs. So it spans asset classes clearly. And so the venture aspect is very small in PE-WIN, but very good network on the women's side. Unfortunately, African women entrepreneurs get less than 2%. So we still have a lack on the entrepreneur side. And then in the venture space around Africa, there aren't many of us female women right now. So hopefully it will change this time.
One of the things that
About 5 minutes left.
One of the things that interests me, because I often bring clients of mine together, we do appreciation events, and I like to introduce people who are like-minded to each other that might help each other. The 3 of you, this is for the 3 of you, you find that you can build a community somewhat with the investments that you have, with the companies that you invest with, and do you ever find that there's a crossover with them?
Yeah, I'm happy to take this off. I think community is probably one of the most important things that we do. We really see ourselves as venture capitalists as at the center of a marketplace, right, between our LPs and our founders. And for us, so much of the value for our founders, so much of the value for our LPs, so much of the value is bringing that entire group of people together. Because on the one hand, we're being trusted, right, to invest this capital into companies that are going to grow it. But I think just as importantly, it's about creating those connections that are going to help enable growth on both sides. We have so many of our LPs, family offices, institutionals, next gens, former tech founders themselves that are making connections and actually building new opportunities with our portfolio companies directly, whether that's through direct investments, business development partnerships. And so I think that's really important, and that's why a lot of what we do, and now that we're able to do this again, and even being back in this room in person, is bringing people together. And so we're really prioritizing that this year. And like I said, we're kind of traveling around the world and hosting our communities, people in these kind of curated groups to really facilitate those connections.
Yeah, so listen, the Africa venture space is, the default is collaboration, not competition. We're in a small boat, we're rowing, we sometimes have to bucket while other people row, it really is a close-knit community. The startup ecosystems are still small, also densely networked. People are like, well, how do you find entrepreneurs? And I'm like, oh, I've known many of them for many, many years. It's a small space that makes it very much a community. And, some of us were talking the last couple of days about whether it'll change over time as all this bigger, newer money comes in. But those at the early stages, it's still few of us. So really is a community. And my fund is backed by family offices. And so small group of LPs and many LPs and individuals. We do have individual LPs, and many of them want to do this because they want to be involved. They want to mentor or connect or something of that sort. And so one of the individuals, he's a global CFO at a tech company, and he wants to, help. He's done M&A before, and so he wants to be connected and be really engaged. And so the community that our fund creates is also small and proactive. So it's always been a pleasure to work in this space.
Yeah, so a quick story on that. Yes is yes, yes, and yes, and yes. This PhD doctor, spin out from UCLA, doing some great things in many areas, but one in pancreatic cancer. Anybody that knows anything about pancreatic cancer, it's one of the worst cancers you can get. It sucks, excuse the expression, but it's just really bad. So met a gentleman, Andy, of the Lust Garden Foundation. General came out of the MSG, James Dolan. So that it all happened. I met him, Andy, the guy from Lust Garden Foundation, 3 years ago. I reached out to him last week. I said, got this guy at UCLA, can I connect him? He said, Pete, just send me over the information. So it's a beautiful thing. And I didn't even charge legal time for that. So it's a great thing where you can connect people and help, especially in the life sciences and the cancer space, because we all unfortunately have to deal with that too much.
Get some of that back end, Pete. I'll make sure you get on the back. There's a liquidity event.
Yeah, exactly. I like that.
Aubrey, is there anything you'd like to end up with?
No, just that, it's an entire continent. There's probably lots of questions I didn't get to. You can reach out to me. I'm very accessible. Happy to talk currency risks or other risks that are real or perceived. And happy to engage with any of you further.
Emma?
Yeah, just to echo that, great group here, and have really enjoyed all the other speakers today. And our whole team is based here in New York. We love to host people at our office. And just get to know people in the ecosystem as partners and as friends. So I'm easy to find on email and just emma@tmv.vc. And yeah, we'd love to connect.
Okay. I'll keep it short. Thank you very much. Really enjoyed the discussion, and thanks for your questions.
Thank you.